In money matters, the JSE is firmer along with its global peers as the month of September draws to a close already. For the month, the local bourse is on track to end more than 2% weaker as the higher for longer interest rate narrative by the U.S. Federal Reserve weighs on the market. Trader and founder of Herenya Capital Advisors, Petri Redelinghuys, joins us now for the latest market moves. Petri, a very happy Friday to you. Is that reflected on the markets? Let's start with an overview of how the local index and the rand are faring so far.
Good afternoon, and thank you very much for having me. And yeah, to an extent, it is quite a happy Friday. I guess the market is a bit quiet. I think this an overall theme that we've had for the last little while is that volumes traded as somewhat thin. So that problem, I suppose, frustratingly persists. However, the market feeling a bit better. Yesterday was slightly better as well. It's been a tough week really for the JSE, but about 0.25% up on the day so far. I must add that this is off the highs. We were well over 0.5% higher a few hours ago, and that sort of drifted back down. As we see the rand quite a bit stronger as well, actually around 1% stronger, trading at 18.79. So a little bit of positivity coming in, I think, before the end of the weekend. Before the start of the weekend. What we saw from the US last night also was quite a strong upward move, or quite a big bounce from the US markets. We've seen the S&P 500 and the Nasdaq particularly coming under quite a bit of pressure, and that relief coming in a bit yesterday. I think rising all the ships at this stage. You know, the rising tide lifting all the ships. So market's feeling a bit better heading into the weekend. Although overall, I would say from a sort of medium-term perspective, I think any strength here on the Aussie or on the top 40 index, or in the local market, if you will probably be somewhat short-lived, maybe a couple of days of green. However, for now, I think that the macro risks still persist in the market, probably remains under pressure for some time.
Okay. South Africa's private sector credit advanced by 4.38% year-on-year in August 2023, below market forecast of a 5% rise. What to read into this?
It's just signs of a struggling economy, to be honest with you. Hey, and we see it really everywhere, right? I think that there was an interesting talk or a speech that was made by a guy called Larry Fink, who's the CEO of BlackRock, talking about how, you know, on a global level, I guess, you know, people are underestimating the impact that inflation has and how ingrained inflation is in the system and how we're actually going to struggle with higher inflation for longer periods of time, and what that's going to mean for higher for longer interest rates, right? The era of, we've had a decade and a half or 15 or so years of really incredibly low interest rates, particularly if you look at the US. And that era has come to an end, and there's now we're moving into a normalization, which is going to mean higher inflation, higher interest rates. So that, you know, it has a ripple effect onto the rest of the global economy, and it's been a really tough time for us. Obviously, we have our own goals that we score so fantastically well from time to time. Water shedding now is the new thing. Load shedding is something that we've been, gotten really, really very good at over the last 15 or so years. So we have a slew of own goals that we've scored against ourselves, but also, you know, the international sort of macroeconomy slowing down somewhat is having an impact as well. So I think that we can just see that in our local economy. It's really tough out there. Even volumes trading through the JSE, for example, is a bellwether of that. The economy is in a tough spot, and it's not easing up. I mean, there are every now and then, you know, one or two things to be quite grateful for, or signs of hope. But for the interim, I know it's not a very popular message, and I'm sorry, but you know, tough times look like they're going to be here for a little while still, and hopefully, you know, we can come out of this. We'll see what BRICS 2.0 can do for us. However, in the sort of near term, over the next few months, I think it's still going to be quite a tough environment, and we can see that reflected in the data that's, you know, being reported. Obviously, most of the data is historic. But, you know, something like the credit interest or the credit data that was reported is kind of indicative of how willing people are to go out there, take credit in order to take risk, right? So take credit to expand your business, take credit to buy a property or a car or whatever the case is. And people are not willing to do that. And that's generally, fewer people are willing to do that than what we anticipated. And that's generally indicative of people who are uncertain of the future, right? And if people are uncertain of the future, they generally are unwilling to make big investments, and that leads to slower economic growth. So it's a bit of a self-fulfilling prophecy, if you will. I think it's just indicative that people aren't very confident about what's, what the next year or two holds, as they're currently under pressure. So a little bit of good news and sunshine will do well, but we have to wait patiently, I think, and just remember, I think this is a very good time just to get a message to the viewers: pay your debts, right? It's not going to get easier, so focus on paying those down as soon as you can. It will make a big difference if interest rates do continue to go up. Okay,
happy Friday to you, Petri. Ascendas Health has published its
very sad.
Let's not shoot the messenger. Ascendas Health has published its annual financial statements for the year ended 30 June 2023. Help us make sense of the performance.
So they're looking a bit better. That's some good news for you. Sorry about that. So they're looking a bit better. Look, the market look, a couple of things. One, it's not the world's most liquid share. So a 2.9 or 3% move isn't exactly, very big in the context that it doesn't trade a huge number of shares every day, and it is trading currently at 67 cents, right? So to move a few percent isn't very difficult for such a small stock. But there are some good and some bad. They're still in a loss-making position, which is bad, right? They did a capital raise of, I think, 101 million just over some time ago to kind of restructure the business and save it from sinking, if you will. It looks for the most part like they've essentially stopped the bleeding. They've restructured the business. I'm just going to sort of read some of these things. The gross profit margin declined, to 39%, so it's still quite healthy. Total comparable operating expenses decreased by 55 million, so that's a 6% decrease. Operating loss from continuing operations improved 62%. So last year they lost 758 million. This year they only lost 286. Now, still a lot of money, but it is considerably better than what it was, right? And there was quite a bit of restructuring and recapitalization and business units that they consolidated, ones that they completely sold off or closed down or discontinued. So it seems as though things are improving. However, they do note that a lot of the interventions that they've done is only really going to start bearing fruit from next year. So they're still, restructuring isn't exactly cheap. So they raised a lot of money and had to use a lot of it in order to do this restructuring and to get rid of the business units that they didn't want. For example, they sold one of their business units for 44 million, which was their pharmacy sort of business, their pharma business that they had. So there's quite a bit of movement under the water. I don't think we're seeing the results just yet. Shareholders, I'm sure, are somewhat impatient. At one point, the share was almost 24 Rand. It's now 67 cents, right? So it's been a tough time, but it doesn't yet look like they are out of the water. I'm not 100% sure what advice to give here. If you are extremely brave, you can maybe buy some. If you think that their 2024 outlook is looking a bit better, but for those who are cautious, it's probably still a good time to wait.
Sure. Sasfin's voluntary trading update is also out. Talk us through the numbers.
So no numbers to speak of, to be honest, in the Sasfin trading update. So I basically said, look, our audited financials that are supposed to be out by the 30th of September, aka tomorrow, will not be out tomorrow because there was a delay in finalization of the audit. Fair enough. I think that sends a shiver down the spine of most investors in South Africa. Steinhoff had a similar story. I'm not equating the two to each other. Please, let me just make that clear. But I think that kind of leaves a little bit of a shiver down people's spines. It's not necessarily always, needed, right? Sometimes audits, also we get audited and that kind of stuff. Audits can take long, right? And sometimes it can be a bit delayed. So it's not the end of the world. They did mention that they are, from their sort of metrics, earnings per share is looking quite a bit better. And they did mention that, obviously the liquidity, there's a minimum liquidity requirement that financial service providers need. Those are looking very healthy, but they didn't actually give any numbers. So they just came out and said, look, guys, we apologize. Our statements will be out in a couple of weeks. I think they said 11 October. So basically a week and a bit. And then they'll put the statements out. They just won't be doing it today. So the share price also not, I don't think it's traded at all today, to be honest. So it hasn't really moved. So.
Okay. Thank you so much. Petri Redelinghuys, trader and founder at Herenya Capital.